Most companies that consistently lose big money will fail, plain and simple. Oh, sure, they can come public. They can dazzle us for a few quarters where it looks like everything's finally coming together. But most of the time, it doesn't happen. They end up cutting your heart out like that priest in Indiana Jones and the Temple of Doom. And then the short sellers feast on it. The people who've been arguing for days, months, years that it would all come crashing down, they make the big money. Every once in a while, though, someone pulls it off. They take an astonishing idea right through the gauntlet and make it to the promised land of milk and honey, usually through the brute force of the founder, the unbelievable nature of the product, and breathtaking execution from the team. You typically need all three, which brings me to Tesla, okay? Because Tesla has it all. Last night, Tesla reported a staggering quarter, their second in a row, and it left no doubt that the messianic longs were right all along. If I weren't so chill, then, I would take a moment to roast the short sellers who kept telling me that this thing is going to crash. On the surface, the results were solid. Tesla reported non-GAAP earnings of $2.14 a share, $1 billion in free cash flow, projection of 500,000 cars to be delivered. But underneath, it was insanely good, which is why the already red-hot stock surged more than 10% today. From listening to the conference call, which was pure joy, by the way, it's obvious that Musk could make 1 million cars this year, and he still wouldn't be anywhere close to meeting the demand for these things. You think if Ford and GM doubled their production, they'd make more money? If anything, they'd probably lose more money. The red ink would drip from those cars, given the incredible execution and how quickly Tesla can build new plants. 10 months for a plant in China. All right, but they built a hospital in 10 days, so anything's happening. There's the one that's going to go up in Berlin is going to be amazing. Musk may be able to get output somewhere close to where the demand is sooner than you think. Then again, as he explains, Tesla's on the road beget the demand for more Teslas. People see these cars, and they want one. I want you to do this. While you're sitting through all the car advertisements during the big game this weekend, remember that these companies are spending billions to stimulate demand that comes to Tesla naturally. They don't spend anything. Still, even knowing all of this, the turn here has been stunning, with the stock up 165% over the last 4 months. How is that even possible? Oh, by the way, yeah, I know, you got to be only in index funds. You can't pick stocks. Who knew about Tesla? How about all the people who rode in them? To understand this move, you have to consider the last couple of times something like this happened. I'm talking about Amazon and Netflix. When Jeff Bezos launched Amazon, it was an online bookstore. I remember going out to see the good people at Borders Books in Ann Arbor, Michigan, 15 years ago, and they were just barely confronting the possibility that maybe Amazon was for real, even as Amazon was, at that very moment, putting them out of business. I had a similar experience with the CEO of a major national retailer, now in bankruptcy at about the same time. He told me Amazon was losing fortunes on every object besides books. Well, have you seen, let's say there's a department store that used to be a household name in this country? We don't see it much anymore. And, of course, where's Amazon? Through 2000 tonight. Back in those days, when you talk to the smartest guys on Wall Street, the two words they most commonly used to describe Amazon were Ponzi and scheme. It was always the most shorted stock around, with one short seller after another arguing that the business couldn't last. Eventually, Jeff Bezos would run out of money before Amazon ever amounted to anything. But, there were always true believers. There were people who loved the product, people who found the alternative, going to the mall, looking for a parking spot, walking around in a dreary house of consumption, to be repulsive, repugnant, and exercise an inconvenience and frustration where you end up paying top dollars prices to be hustled by bottom dollar businesses. And I say this as someone who actually likes to shop. My family was steeped in retail, but even I was smitten by Amazon early on. I couldn't figure out why the shorts hated it so much. Chapel Trust has owned it since probably like the beginning. The bizarrely charismatic founder and CEO was beyond rigorous. The model seemed obvious with palpable ambition and mind-blowing execution. As long as Bezos stayed on the path to world domination, I figured Wall Street would always give him money no matter how quickly he burned through it. And that's exactly what happened. Wall Street gave him the money to make it work. Amazon became the greatest consumer growth stock of our time. I'm sure people are going to refer to that, particularly after tonight's performance. They're the best performer of the year. And the shorts? Well, the shorts in Amazon, well, they're all gone. Saw the same thing with Netflix. Who could have believed that a mall-based DVD rental service would become such a huge success? Not Reed Hastings, the chairman, co-founder, and CEO. That's why he changed his model, ditching DVDs to become a service that lets you stream a huge library of videos online for a ridiculously low price. A whole month of Netflix is cheaper than going to the movie theater for 2 hours. And rather than going to the movie theater and watch something you don't like, he pushes exactly what you want, just to you. Just like with Amazon, the shorts looked at the plan and found it wanting. How long could this clown keep losing money, they asked. The answer, as long as it takes to get rolling. Because Wall Street will gladly raise money for a talented executive who dreams of disrupting an entire industry. They love that. Again, like Amazon, if you're a Netflix user, the stock made perfect sense. But to the bean counters, its valuation seemed absurd. In the end, Netflix obliterated the shorts. Some of these guys were very smart, much smarter than I am, but they just didn't get it. They probably didn't use the product. And now along comes Tesla. Elon Musk has fought everyone, including himself, to create a technological marvel on wheels. This is a deliciously whimsical, always superior vehicle that fits the millennial zeitgeist of first do no harm to the planet. I think there's a huge appetite for any kind of legitimate play on sustainability, and his is Exhibit A. I know I wasn't early on this one. I was on the fence for too long. I wanted to wait for a breakout quarter that told me Tesla would be able to make it. I'd rather be too late than too early when I'm dispensing advice here, because I don't want to bury you in situations that don't work out. 3 months ago, we got that breakout quarter I've been waiting for. At the same time, my family got to drive the X and the 3, and I became a believer now that the balance sheet was fixed. Well, what can I say? I test drove the original, and I loved it, but it wasn't enough for me because I was too focused on the financials. Still, I can't feel too bad for being late here because Tesla gave you a quick 340-point gain since I turned positive on it. Not so bad. So what did the short sellers miss here? Okay, I think they misjudged Musk once he got serious and stopped fooling around on Twitter or antagonizing the SEC. They misjudged the car, which isn't just a car. It's more like a digitized Batmobile, as you can tell from the rapturous questions asked by real people in a conference call, not analysts. Most importantly, they misjudged Wall Street, okay? I've been ambivalent about Tesla, and until that quarter, that drive, and that brilliant CFO, who I mentioned my fears about when I was a long time ago when the stock was much lower, they told me, hey, listen, Elon could raise $2 billion with one phone call. Well, in the end, that's what doomed the shorts. There was all the capital in the world for a founder who had great product and execution, and that's what the shorts couldn't figure out. The bottom line, Wall Street never runs out of money for a company that has the best product, flawless execution, and off-the-charts demand. They don't come around very often, but when they do, the usual financial concerns go out the window. And like Amazon tonight, like Tesla last night, the real believers make the big money. Let's go to Dave in Illinois. Dave.
Dr. Cramer.
Dave.
Hey, I'm still licking my wounds on charitable trust holding Facebook today, but I digress. Today, I would like your take on a name in sports cars. It's not red-hot stock Tesla, and it's not recent IPO Aston Martin. I'm talking today about Ferrari. Recognizing that you live in a split preference Italian sports car household, as Lisa admires Lamborghini,
True.
Ferrari is up 34% in the last 12 months.
Yeah, Dave, listen, Ferrari is a great company. It's also a cult stock. And you know what? It's a fantastic business. And I think you're right to like it. Facebook, I think, is going to come back. I mean, it's absolutely true. It had a bad day today. Raymond James Tate just gunned it so bad yesterday. But, you know, Dave, we got that Facebook. We got some at 20, like 20, 30, 40, 50. So we're doing well. Thank you for that call. I do like race. I have the red jacket, too. And I wear it. Clarence in Connecticut. Clarence.
Oh, a big town, Connecticut. Booyah to you, Jim. You've got a lot of viewers here in town.
Oh, man, that's great. Thank you. I love to hear that because, wow, it is hard to come out to do the show every night unless people do like it. What's going on?
All right. This stock gapped up on strong volume after an earnings beat December 10th to a new all-time high, but it's traded straight downhill since then, and it sits below its 200-day moving average now. I know it buys back its own stock. It has a very large institutional ownership, and it looks oversold on a technical basis. But I'm still afraid to pull the trigger on AutoZone.
No, come on. This is when you buy an inch a quarter. They're going to report a good number. They're buying back that huge amount of stock, as you said. I feel that it's a compelling situation. And yes, even though Amazon reported a great number tonight, Amazon was never able to crack into that parts business. You're in good shape, Clarence. All right, and thank you for the kind comments. Tesla just has it. It has what it takes to stun the shorts and go up huge. And the believers make big money, as they did tonight in Amazon. Much more mad money ahead. First, these two bank stocks have been dropping since they announced their merger. What's that about? I'm sitting down with the CEOs of Texas Capital and Independent Bank to find out. Then, well, let's talk about spend. Spend, baby. I'm giving you the good and the bad and the non-existent. And all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.